Hey, what's up? It's Shawn, your Charleston realtor. Today I want to summarize what I view as the 5 advantages of owning real estate and how real estate differs from other investment classes. If you guys don't know me, I'm a realtor and real estate investor out here in Charleston, South Carolina. Real estate has changed the trajectory of my life, and my goal is to help others down that same trajectory. First, if you don't mind, please consider giving this video a thumbs up and hit the subscribe button. It helps me out a ton. So the first advantage of owning real estate is this concept called buying equity. This is a concept that I preach to all of my investor clients, or even my clients who want to start down that real estate investing journey with a primary home purchase. Another way to say this is you buy a home under market value or its appraised value. As soon as you do that, you have essentially increased your net worth by whatever the difference between purchase price and appraised value is. So take, for instance, this example. Let's say you find a home that is in need of repairs. Let's say that the after repair value, or ARV for short, is $300,000. But you're able to buy it for $230,000 and then put another $30,000 into it in the form of repairs. You've invested $260,000 at that point, but now the home is worth $300,000. So that $40,000 difference is essentially the equity that you bought. I say it again and again with my investors. The crux of real estate investing is finding the right deal. The margins must work for your investment strategy. Buying a turnkey home at market value is not real estate investing, at least not in my book. It's just parking money, and that money could be better suited in a different investment asset. Buying equity is a great way to increase your net worth and is better suited for that long-term approach that real estate is meant to be. The second advantage of owning real estate is principal paydown. Over time, you or your tenants will be paying down the principal of your loan. Now, depending on where you're at on that amortization schedule, this could be significant, or it could be insignificant at first. Either way, each month you make your payments, your net worth is increasing, even if you can't necessarily access that equity immediately. But let that add up over a period of 5, 10, or 30 years, and all of a sudden you have some serious equity in your investments. Now, the third advantage of owning real estate are the tax advantages of doing so. Now, I'm not a tax advisor or CPA, so you'll need to consult with your accountant for your particular situation and make sure everything is applicable to you. But there's a reason why so many millionaires and billionaires own real estate themselves. When I'm giving real estate seminars, I describe it like this. The government recognizes it cannot do 2 things. First, it cannot create jobs for everyone. And second, it cannot create housing for everyone. It relies on the private market forces to do so. And to stimulate those forces, it writes the tax code to make it very advantageous to be a property owner or a business owner. But we're talking about real estate, so what are the tax advantages of owning real estate? Well, if you just own your primary residence, then you can take the interest you pay each year and offset your active income. Instead of taking the standard deduction, you might find it's more advantageous to take an itemized deduction with your interest expense, especially in this era of elevated rates. Again, talk to your CPA about your particular situation. But primary residence benefits are boring. The real fun in the tax code is in investment properties. There are so many ways to shelter passive income, and sometimes active income in certain scenarios, through real estate investing. For instance, if you do it right, depreciation plus interest expense plus your operating expenses of your investments should typically offset any income you make through your passive investments. In other words, it's very easy to show the IRS that you're operating at a loss on paper when in fact you're operating at a profit. What happens when you want to sell the property and take that profit? You have to pay capital gains, right? Well, actually, no. You can defer those gains until you die through the Internal Revenue Code Section 1031, or 1031 exchange for short. When you die, your heirs receive the step-up basis of that real estate up to a limit, so that they don't have to pay taxes either. So in other words, if done right, you can make it so that you never pay taxes on your investment real estate, from the money you received from your tenants to the gains you receive when you sell the property. All you need to do is buy another like-kind property. And over the decades, people can do this to step up from single-family homes to multifamily to apartment complexes to multiple commercial assets and investments, all without ever paying capital gains tax if done correctly. Talk to your CPA. That's pretty cool, right? Now let me stop right here and get something off my chest. There's a lot of people in this country that will disagree with this mindset. They get angry at this, that the rich don't pay their fair share, etc. And I get that. But there's a system in place. We have to play within the system. We didn't get to write the system, and we have no control over it. Getting angry at the system does not change anything, and the system isn't changing. So I feel like a better idea is directing our energy to make the system work for us. Create a better life for you and the people closest to you. And like all investments, you take the risk and you reap a reward. The difference between real estate and other investment classes is that there are multiple ways to make money in real estate. And the money you do make typically isn't taxed when you do it correctly. Which leads us to the fourth advantage of real estate: cash flow. The idea is that your tenants of your investment properties will pay for the monthly debt obligation, like your mortgage payment or some other note, and then you're able to pocket some of that leftover cash. It's true passive income, right? Well, maybe, but usually not. Ask any real estate investor and 9 out of 10 will tell you that it's not truly passive. And typically the cash flow you do get will not be significant enough to be life-changing. I know some very seasoned investors who target properties that might cash flow only a couple $100s per month. For cash flow from your investment rental properties to truly be life-changing, you usually need quite a few doors. Don't quit your job after you buy your first rental property because you now have a passive income. Personally, I set all my cash flow aside just to cover repairs and other expenses as they come up. Now there are some great ways to increase cash flow from your investments. I even made a video on this, link in the description. But for now, we'll leave it at that. It's nice, but until you start getting a large portfolio, it's nothing much really. Now let me caveat that with saying that house hacking cash flow is actually significant. If you're able to rent out a couple of rooms in your house or the other side of the duplex that you live in, then you'll pocket thousands, if not tens of thousands of dollars each year. And the great thing is that just offsets your mortgage payment that you would otherwise be paying in full. And one last slide. All investment properties should cash flow. You should never have an investment property that's losing money on a monthly or annual basis. I just want you to recognize that cash flow, it's not going to be significant. And now we're left with the last advantage of owning real estate, and that is market appreciation. Over a 13-year period, there has never been a time in US history where real estate has lost value. It has always gone up in the long term, which is why it's described as a long-term investment. It's not a get-rich-quick scheme, and there's plenty of people who have lost tons of money through speculative investments. That's not what I'm talking about here. Now, after the US came off the gold standard and the Federal Reserve started playing with the monetary policy, real estate prices really took off, and the graphs are a lot more topsy-turvy since then. It's possible that there's going to be further upward trajectory in prices with the insane amount of quantitative easing since 2008, and especially during the COVID-19 pandemic. In other words, there's a lot more money in circulation right now than there ever has been before. And that money needs to go somewhere. Typically, depending on the market cycle we're in, it's inflationary pressure that drives real estate prices up. That could be as low as 2 to 3% that we saw year over year in the last decade, or it could be as high as 9% that we saw during the pandemic economy. Other factors besides inflation affect real estate prices, sure, but the great thing about real estate prices is that it tends to follow the inflation trend line. There's going to be periods of growth and periods of contraction, but you cannot look at real estate on a national level. It differs from market to market and even within markets themselves. Areas with rapid population growth and wage growth tend to appreciate faster than others where those demographic trends are not present. But ask anyone who's been around real estate for 10, 20, 30, 40 years. True wealth in real estate is not made through buying equity, though it certainly starts you on the right foot. It's not through principal paydown either, though it can over a long period of time, though most real estate investors don't keep properties long enough for that principal paydown to be significant. The tax benefits keep money in your pocket, and cash flow won't make anyone rich. No, just ask experienced investors and they'll tell you that true wealth in real estate is made through appreciation. So that's my take on 5 advantages of owning real estate. Let me know what you think in the comments below, and I'll see you in my next video.